Well, the market rally killer spoke today. The FOMC, which stands for the Federal Open Markets Committee, it's the division of the Federal Reserve that talks about monetary policy, met today. They left rates unchanged, which was no surprise to anyone. I don't think there was much anticipation that we'd have a rate change today. They left it at about 4.25 to 4.5%. The thing that's interesting is all the market indices were higher at about 135. Powell took the podium and began speaking. And of course, now we've hit session lows with the market. So the outcome of that is I don't think people like not only the fact that there wasn't a surprise that they're not changing, but his forward guidance. I think there was a lot of thought that as we look to the next Fed meeting and subsequently the rest of the year, that there would be some form of indication that we would have lowering interest rates. He didn't do that today, and he took a very different tone, which is, I think, why markets are reacting. There's a couple of things that I think are a challenge for the Fed. So when you look at the situation, they've got a mandate of keeping unemployment low and price stability and or inflation, making sure that we don't have high inflation. So as we look at the unemployment, we've continued to remain around 4.1%. That's not so much a reaction by what the Fed is doing. We've got a declining workforce. You look at what's happened with immigration. It's not surprising that we have plenty of jobs for the amount of people that actually want to work. What is interesting, the Dallas Fed, the manufacturing survey was just released, and it surged 20 points this month, which is an indicator that as you look at manufacturing domestically here in the U.S., it's showing growth. It's promising. The second quarter GDP rating just came out on the first read at 3%. Again, a very strong read at beat expectation. Inflation is moderating. Powell talked a lot about tariffs today and the forward impact of tariffs. Thus far, we haven't seen a lot of that in the market. So when we look at the economy as a whole, a lot of things are showing strength. Here's the challenge, and this is the big issue. New home sales, when we look at new home sales for the month of June, we're down 6.6%. And so when people are trying, you look at the real estate market, people are trying to move homes, find homes. That's one of the largest net worth creators for a lot of people. We hit the highest level of inventory of actual homes on the market just last month. We have an inventory level of about 9.8 months. We haven't seen that level since October of 2007. So I want you to think about that. Consumer spending is down. It's starting to slow. It's moderating. In addition to that, the Fed has kind of stood alone. When we look at other central banks, we look at the European Central Bank, they've cut rates 8 times in the last 6 months. The Canadian Central Bank, they've cut rates twice. The Reserve Bank of Australia cut rates twice. And again, it feels like that this Fed is taking a more stubborn stance than it is really looking at the data and watching monetary policy like they've always touted as their mantra. The real indication, borrowing rates, real estate, commercial real estate, investment real estate, all of those things are going to continue to have challenges given this current cycle that we're in. The underlying economy does seem to be doing fairly well by all readings, and unemployment stays low. So we had hoped for 1 to 2 rate cuts the remaining part of this year. That changed today as he began to talk. So we'll have to absorb the remaining part of the data that comes out. But that's kind of the market update from the FOMC today.